Hi, thanks for joining us today. We have a presentation with Mako Mining CEO Akiba Leisman. He is going to discuss the resource that came out earlier this week, as well as some of the exploration that's ongoing. But we are going to do an overview of the company to start because there's some new people on the webinar. Before we get started with that, I would just remind everyone that this presentation will contain forward-looking statements. If you'd like to know more about those, you can check them out on the company's website, and there will be a Q&A section at the end, so feel free to input your Q&A in the Q&A box at the bottom of your screen. With that out of the way, Akiba, thanks for joining us today.
All right, thanks, Deb. Okay, so the meat of the presentation will be about the resource update. So I'll get to that in a little bit. So let me just describe what you see in front of your screen right now. This is a picture from about 12 weeks ago. So the way that I like to describe what we're doing in northern Nicaragua is really three things. And you really need to look at this company as doing three separate things. First and foremost, we are in the midst of building what will be the highest grade open pit mine in the world, bar none. As part of that resource revision that we went through this week, using extremely conservative parameters on how we're calculating grade, we expect fully diluted grade of this deposit to meet or exceed the 9.54 grams a ton that we have in the open pit component to our mine plan. So that will be the functional equivalent of the mill head grade that will be going to the plant that you see on the left of your screen. Now, this plant is being designed with a lot of flexibility in it. So right now we are designing a 500 ton per day mine. We are approximately 90% complete as of this morning. We anticipate having first gold pour sometime in January and commercial production in early Q2. You can see in the center of your screen, we have our dry stacks tailing storage facility. So top of the line when it comes to environmental safety and security. And then over to your right of your screen are the first mining benches of the high grade ore that we're pulling out of San Albino. The first bench we reported to the market had a fully diluted, again, the functional equivalent of a mill head grade of just under 12 gram material, which will make this by far the highest grade open pit only mine in the world. We'll be reporting the second bench grade reconciliation. I would guesstimate sometime around the second week of November, and I fully anticipate the grades to be roughly equivalent to what we experienced in the first bench. Now, secondly, as I was mentioning, we do have flexibility on this plant to expand the operations. So 500 tons a day, but basically everything that you can see in the components over here is capable of handling 1,000 tons a day. In fact, we've gotten permits to be mining at 1,000 tons a day by the Nicaraguan government from a couple of months ago. Now, some might ask how are you going to be mining at 1,000 tons a day when you have a relatively small resource over at San Albino? And certainly there's operational challenges of even getting the throughput at San Albino at that level. Well, the answer is we made another discovery to the south of this asset, an area called Las Conchitas, which if anything has higher grades than what we have over at San Albino. Over the course of the next week, I'm going to be putting out additional exploration results over at Las Conchitas, which will show that yes, we do have an extremely high grade, shallow deposit that is currently being developed over there just a couple of kilometers to the south. So what we aim to do, that as soon as this mine turns on and we're starting to generate cash in the early part of next year, is to use that cash and go and explore, develop the Las Conchitas asset with a minimum of a 75,000 meter infill program, such that that can become a mineable resource sometime by the end of 2022. And then finally, and probably the most important component of Mako, is that we do think that we're sitting on an orogenic gold mining camp over here. So this is not a volcanic hosted epithermal system like you find elsewhere in Nicaragua or elsewhere in Central America. This is a sedimentary hosted orogenic system. The reason why this becomes important is that it is not unusual to find global analogs where these orogenic gold mining camps wind up containing tens of millions of ounces when all is said and done. Now, obviously, it's going to take a lot of exploration work for us to explore our current 188 square kilometer land package, but we have all the sniffs and even hits in terms of exploration results that demonstrate that we do have the ability to find additional deposits of very similar quality to San Albino, not just over at Las Conchitas, but elsewhere on our property. We are fully funded. So there was $55 million that went into this company that were either backstopped by, provided by in its entirety, or led by the controlling shareholder, Wexford Capital, who currently owns 56% of the outstanding stock of Mako. I used to work for Wexford Capital. They're a hedge fund and private equity group out of the United States. So they backstopped 2 equity raises that amounted to an aggregate of US $40 million. And they've also provided an unsecured debt facility in the amount of US $15.15 million that we put in February of this year. We anticipate entering into a cash flow positive situation over at Mako, with us having in excess US $5 million on our balance sheet. So we've raised more than enough capital, not only to get us to first gold pour in early January, but through to commercial production in the early part of Q2 next year. There's currently 655 million shares outstanding. The reason why the share count is so high is that first equity raise that Wexford backstopped was in the form of a rights offering that expanded the share count at the time by 80%. Wexford took just over 70% of that rights offering transaction. And then you can see the pie chart on the right, which is delineated on a fully diluted basis, but on an issued and outstanding basis, Wexford currently owns approximately 56% of the outstanding stock. Second largest shareholder is a wealthy individual named Paul Stevens. He co-founded the eponymously named Robertson Stevens Investment Bank that was sold to Bank of America in the late 90s. He's also been a natural resources investor going back for decades. He's a fabulous person to have on our shareholder registry, and it does show the level of seriousness that we have when it comes to our investors. Between Wexford, a highly respected private equity fund controlling shares, our second largest shareholder, Paul Stevens, and myself as management being the third largest shareholder, where I've been in the open market buying an aggregate of over 8.5 million shares personally since the merger of the 2 predecessor companies created Mako in November of 2018. Now I'm going to go over a little bit about the merger and what happened with those 2 entities, Marlin and Golden Rain, and why that is related to the resource update that we had earlier in this week. Now, Mako was created through the merger of Marlin, which was a company that I created back in 2012. We had a small scale mine that was operated in Sinaloa, Mexico, that, for lack of a better word, did not work from a technical perspective. We bankrolled a management team and an asset that frankly didn't pan out. We recognized that in 2014, and Marlin started the process to go and merge with what effectively was an unwilling counterparty over at Golden Rain. 2014, Marlin created a royalty company called Sailfish Royalty Corp, which is now a publicly traded company that I also run. We put on a stream on that asset that effectively rendered San Albino uneconomic and certainly unfinanceable from that point in time. It was a 4.5-year process for us to get Marlin and Golden Rain merged together such that we could restructure that royalty stream and leave it as the royalty package that exists today, a 3% effective royalty on the primary project area that you saw in that initial slide in our PowerPoint, and a 2% royalty on the rest of the land package that exists today. Once that royalty was restructured, Mako became a company that was able to develop the San Albino asset, which is now going to become the world's highest grade open pit only mine. Now, the reason why this becomes important is that on the Golden Rain side, they took the approach of trying to develop a mining asset without putting any equity into the ground. In 2012, the initial resource was put out over at San Albino with the direction of a new shareholder that went onto the register over at Golden Rain. And he wanted to do 2 things: put a resource out that was going to be sexy to the market. It didn't have to have any bearing from a reality perspective. And then number two, do not spend a dime on exploration. So that's number two. It took 4.5 years to facilitate the merger of Marlin and Golden Rain. It took another 5 months for me to forcibly remove that faction from the board. Now, we spent the last 19 months designing a credible, conservative resource based on the information not only that existed from 2012 up until the merger over at 2018, but also through the inclusion of a 24,000 meter infill program that we commissioned the day that I took over as interim CEO in March of last year. When we build mining operations, we make sure that they are done professionally and that they are going to work and that the resource that we put on the table is credible. And when I put my name to a resource statement, frankly, this is the first resource that I'm putting my name to, it is going to meet or exceed anybody's expectation. So let's go a little bit about some of the issues associated with the resource that existed over in 2012 and updated in 2015, and then where we are today from there. So number one, from a reality perspective, in terms of what our geology looks like, we have a series of extremely narrow, shallow dipping veins. And by extremely narrow, I mean anywhere from 1.25 to 1.5 meters wide. And extremely high grade, I mean averaging well in excess of a 1/2 ounce material. The average vein in our deposit is pushing close to 17 grams on an undiluted basis. Now, on top of that, there is a hanging wall and a footwall that is geochemically distinct that forms a wider zone that just arithmetically winds up, if you take the entire zone itself, it winds up lowering the grade of the overall zone of the deposit. Now, back when the original resource was put together in 2012, and actually now that I've actually spent a lot of time going over the work that that other resource generator put out, there was no funny business going on with that resource itself. It was actually put together in a perfectly 43-101 compliant basis, but they made certain choices that caused that resource to be lower grade than what reality is, but it certainly grossly inflated the tonnage of the deposit. So within that geology, the reality of the geology, this narrow vein with a hanging wall and footwall on either side of it, the previous resource estimator was taking the entire zone as a singular geological domain. Now think about what this happens when you're dealing with a narrow vein, structurally controlled vein, super high grade, and then widening out with a geochemically distinct structural zone that will wind up having low grade on either side, on the hanging wall and footwall side. That does two things. Just arithmetically, that winds up lowering the grade of the deposit and increasing the tons of the deposit. So you take what is effectively our 9.5 gram deposit, we take it down to about 6 grams in terms of what was being modeled on the open pit. And then on average, it's basically the same. There's another subtle thing that comes with a resource delineation in that respect, is that if you do not have geological controls on where that high grade is going, your estimation parameters are going to be taking that high grade within the vein itself and then estimating it through the rest of the zone, thereby inflating how much gold was in the deposit. Now, when we went through our 19-month exercise to correct these deficiencies, we modeled our deposit based on how we are mining it. Now, the way that I like to describe how we're mining our deposit, we are essentially peeling off layers of a layer cake. So we have an excavator, we are scooping out layers of waste and even partial of the layers of the hanging wall, exposing the frosting, if you will, and we're mining that frosting. So we're going after that 16, 17 gram vein. There's going to be some dilution associated with it. Now, the way that this was modeled in the resource update is that we put a 1/2 meter of mining dilution on top. a half meter of mining dilution on the bottom. Through our estimation parameters, whether we're in the hanging wall, country rock, or in the vein, we would have an independent estimate of the grade depending on where we were in the model, and we would have an accurate representation for what the grade of our deposit would be while we were mining this vein, assuming that we can mine at half meter tolerances. Now, the resource that came out from that showed that we had a 9.54 gram in the measured and indicated category, and another, that's 95,000 ounces, and another 62,000 ounces reporting to an in-pit number grading 8.5 grams. Now, two things about this. There is not a single speculative ounce in this resource model. The only reason why any ounce of inferred is classified as inferred is that that reports economically to a pit, but either it is outside our search criteria to classify it as indicated, or it happens to be located close to a fault where we are certain that that gold exists, but we're uncertain about whether it exists higher or lower in the pit. And the reason why this becomes important is that all resource categories, measured, indicated, and inferred, are expected to be mined. Full stop. Every single one of these ounces in the open pit and underground, the entirety of the resource is pushing 280,000 ounces, is expected to be mined. Full stop. So basically, everything that you see on this sheet will eventually, with either additional drilling or even through mining, will turn into what the functional equivalent of a reserve would be once we have economic overlays for these ounces itself. Now, secondly, San Albino is but a small part of our land package. We currently have 188 square kilometers of ground. That inner blob that you see within San Albino over there is actually a much larger area than what we've designed the resource on. That inner blob is what you saw in that 2015 resource estimate that had 204,000 ounces of approximate 6 gram material going to the open pit mill. That inner blob, even in 2015, that wound up going down to 4 separate pits that made up substantially less than 40% of the surface area of that inner blob. We only focused our 24,000 meter infill program on 2 of those inner pits within that inner circle. The entirety of the open pit strike length of the deposit that we delineated was 240 meters. Now, why does 240 meters become important? This is potentially a mining district. The strike direction that you see of our veins is going in the direction of the text from the southwest to the northeast. We have delineated our now close to 280,000 ounce in all categories resource on a 240 meter strike length within the open pit over at San Albino. But in the direction of the strike on the other side of the river, through a concession that we acquired in December, Puerto Rios, and through concessions that we owned at the time of the merger on the red and yellow, we have chased the San Albino structure with real prospecting data another 6.7 kilometers, in excess of 20 times the size of the strike length of the San Albino open pit that we delineated. So yes, the resource is small, but it is conservative. It is credible. We will meet or exceed those numbers when we are in the open pit. But it is not a small opportunity or project. We have full expectations not only of delineating the deposit over at Las Conchitas to the south, and I'll go over some of the exploration results that we've put out prior, and some of the exploration results that potentially are going to be coming out over the course of the next week. But we've also chased the strike extension of the primary San Albino vein, another 6.7 kilometers, 20 times the level of the strike that we've delineated in the resource that you saw over there. So let's talk about some of the exploration results over at Las Conchitas. You can see we hit 22 grams over 4.3 meters true width. Now, this was in a wider mineralized zone of 16 meters that started around 10 meters from surface. This is shallow, open pittable. There were 3 economic intercepts within that zone itself. We have holes that are going to be following up on that 16-meter zone that are going to be due out over the course of the next week that will show a continuation of these grades and of these thicknesses. You can see what we hit over on June 22nd over at Las Conchitas, 40.5 grams gold over 4.3 meters. That was just under 2.5 meters true width. That was situated about 25 meters from surface. Over at June 15th, over at Las Conchitas, and again, Las Conchitas, we do not have a single ounce of resource over at Las Conchitas right now. We have on June 15th, where we hit 23 grams gold over 5.5 meters. That was situated about 20 meters from surface. All of this is open pittable. All of this will be delineated into a mineable resource probably sometime in the year 2022, when a minimum of 75,000 meters of drilling is put into Las Conchitas to delineate that initial resource. Now, this is what I'm talking about when our predecessor company just was not spending money on exploration, doing everything that you need to do to get a credible mine up and running. 2009, 2010, the initial discovery of San Albino was made by an extremely competent exploration team that we retained through the merger of 2018. The guys on the ground were doing a fantastic job. In 2012, the company raised some money. They put a board member on the board. A resource went out in 2012, and then you can see the decision that was coming straight from the top of the company, where not a single dollar was put into exploration. The last time that that resource was put together, because there was very little differences between that 2012 delineated resource from November 2012 to when that PEA came out in 2015, virtually no drilling was done, other than drilling that we made Golden Rain do to answer some metallurgical questions down in 2016 that frankly confirmed the deposit is very amenable to the gravity and carbon and leach system that we're building over at our plant. But other than that metallurgical drilling, there was nothing. Now, the second that there was a management change in March of last year, the drilling commenced that grew to a 24,000 meter program over at San Albino. And that's where you can see the bars starting to go up. And right now we have drilled this year just under 10,000 meters of drilling over at Las Conchitas. And as soon as the mine is in commercial production in early Q2, we are taking the gloves off with respect to Las Conchitas and bringing that mine deposit into a mineable resource sometime by late 2022, such that we can use our highly flexible plant that is 90% done as of today, and then potentially expand it by that point in time with very limited capex that needs to be done, such that we're going to be mining simultaneously San Albino and Las Conchitas. And by the way, San Albino in and of itself is completely open down dip. It's completely open along strike. We're sending a rig out there to go after some exploration work on some satellite opportunities over at San Albino. So even at San Albino, we have more potential over here. So San Albino, Las Conchitas, and then probably the most important part about the land package is that we have the opportunity to find other deposits within our 188 square kilometer land package, where we have showings across the full 25 kilometers of strike that we have delineated on our 4 mining concessions. So lastly, I just want to show some of the numbers and show what an outlier San Albino really is in the context of global mining. Again, from a measured and indicated perspective, 9.4 grams a ton. That is assuming that we are going to be mining as wide as half-meter tolerances on either side of the vein. I can tell you right now, we are mining tighter than that, which is the reason why the first mining bench came out at 11.7 grams. It's why the next mining bench that will be coming out in the second week of November is going to be well into the double digits as well. Hopefully, I got to get the assays back, but hopefully well in excess of double digits on 10 grams for that second bench. And we fully anticipate that the mine is going to be delivering at or above that 9.5 grams. That just from an M&I perspective puts us as the second largest or second highest grade open pit mine in the world. And then if you actually break down what those guys over there in the #1 spot, I guarantee you, if they took the conservative levels of how we were modeling the resource, bar none, we would be the highest measured and indicated category of any mining operation, project or mine. And then you can see some of the head grades that are coming out from open pit only mines in the world today, the highest one being 8.5 grams. Now, I've heard some criticism from the market about us having a high strip ratio. I just want to say something about Kizel, which is a fantastic mine. Like Polymetal is a wonderful organization. They are mining that with a 33-to-1 strip ratio at this moment with those kinds of cash costs. There are plenty of operational challenges associated with our mining project. A high strip is not one of them. Based on our grades, based on our current mining costs, our mine can handle just about any strip that you throw at it. So without actually going through specific numbers, because right now we have a resource, not any economic study that goes with that. Even in the mid-20 strip ratio for a project like ours, based on a $2.60 fully burdened open pit mining costs. And again, we have been a mining operation in the high grade going back since August. Even a mid-20 strip winds up equating to only $200 an ounce based on our expected recovered grades going into the mine. Mines like this can handle high strip. It's one of the reasons why this is going to become one of the lowest cost mines in the world. So yes, we have a fairly small resource in terms of what's been delineated over at San Albino. Yes, it happens to be the highest grade mine, second highest grade from an M&I category of any project, open pit project or mine in the world. But it is but a tiny portion of not only our overall land package, but it's a tiny portion of San Albino. So this is a starter pit that comes from the historical issues from our predecessors over a Golden Rain that we had to spend the last 2 years correcting. This is the final layer that needed to be removed for this to be truly our company with our stamp of approval, where everything that's going out into the public domain, inclusive of this resource statement, is going to be met or exceeded by management, just like we've delivered on everything that we've promised to do since that management change happened in March of last year. And with that, I'll open up the floor to any questions.
Thanks, Akiba. So feel free to enter your questions in the Q&A. I'm sure that we're going to have a few come in. I don't see any, and no one really sent any in advance. I think one thing that people have asked me a lot about, Akiba, is in terms of share price, why is the work that you're doing not being reflected in the share price right now? What do you think needs to happen for that to be adjusted?
Right, so I come from an investor's background, right? So I'm taking my CEO hat off and putting the junior gold mining investor's hat on. I need to underwrite something, right? So if I'm going to be underwriting the investment over at Mako, kind of like how Golden Rain was trying to move this company along, on the back of the mine itself, based on just the open pit resource, irrespective of how much cash is going to be coming out of the mine, relative to our market cap, the amount of cash that comes from 160,000 ounce resource, even though we think it's going to be exceeded at the 9.5 gram a ton, is reflected in the stock price, right? So the issue here is that, one, we're not just an open pit mine, right? So we have the open pit, and then it's clear that the high grade and the underground is holding together. So this is completely open along strike and down dip. So number one, what you see on your screen over here is just not it, even from a San Albino perspective. But even going back to once I took over, one of the first things that I needed to do was change the communication of what the strategy of the company was. The strategy of the company was not to build San Albino. San Albino is extremely important in terms of what we're doing over here. But this is not a company that was just going there to build a small scale open pit mine. This was a company that was there to build a small scale open pit mine and then use the cash flow to leverage this off of the two other main objectives over at the company, which is to go and delineate and bring into a mine plan over at Las Conchitas, and then finally to figure out what's over there from an orogenic gold mining perspective. So if you are buying the stock on the back of San Albino, sell your stock. I will buy it from you. I have been in the open market buying 8.5 million shares for any investor that was selling because that we were trying to underwrite it on the back of what you see on the screen. Now, the reason why we are doing what we are doing, building a mine that has the flexibility not only for expansion, but also the flexibility of bringing in ounces from elsewhere in a property, and even frankly from other ounces in other locations within Nicaragua, is very simple, is that we are investors. We have an exploration company with exploration potential and exploration assets. The way that we value an exploration ounce is not some sort of lazy analyst way of assigning a certain dollar per ounce over there. Let's say $100 or $200 an ounce from an exploration in situ in the ground potential. No, we have a plant over here. If we find an ounce anywhere on a property with grades like we're talking about for San Albino, this is more than within trucking distance. We can take an ounce of those grades 500 kilometers away and still be more than profitable. But any ounce, I don't care whether it's at Puerto Rios or at the northern end of Las Segoviana, if we find a 9.5 gram ounce anywhere on a property, that is instantaneously worth $1,000 an ounce to us. The reason why we have built the plant, and again, it's about 90% done, will be commissioned over the course of the next 2 or 3 months, is that once that plant was built, instantaneously, it wound up quintupling the value of any ounce that we can find anywhere else on our property. And that's both over at Las Conchitas, an area that we can basically say is a deposit today, but also any ounce elsewhere on the 188 square kilometers. So one of the reasons why our stock's not performing is because people can't get out of their way to look past what we have just over at San Albino. And if that is your objective, I want you out as a shareholder.
I get your point, Akiba, but if you value it on the cash flow, the stock's still pretty cheap just from that one asset. So that's all I'll say counter to that. I agree with you, it's a land play and that's how people should be looking at it. But if you look at the cash flow,
let's take a look at the number. And again, we have to take a look at this on a conceptual basis, because right now we have a resource with no economic study, right? Because one of the things that we did when we replaced the resource was we pulled the PEA. And we're going to be working on an updated economic study to integrate Las Conchitas with San Albino. But at that 157,000 ounces of open pit material, and again, every single one of those ounces is reporting to a mine plan and we expect to mine it. Let's assume a number, assume a number for a strip ratio. Let's call it 24, 25, whatever the number you want to put over there. That is equating to, based on those grades, of something in the neighborhood of a low $200 an ounce mining cost. And then we have processing costs that we expect to be normalized at about $60 a ton. So slightly elevated than maybe some companies that you're familiar with, but we're a small scale operation. That shouldn't be surprising. At $60 a ton, at 9.5 grams going to the mill, and again, we expect those numbers to be exceeded, it's probably adding another 200 and change dollars an ounce. So the functional equivalent of a C1 cash cost on a real and honest way, it's going to be a low $400 an ounce number, again, on a conceptual basis. You burden that with the royalties that exist in the property, taxes, sustaining capital, which is principally amortizing additional tailings capacity over here. You're probably looking at a real all-in sustaining cost somewhere in the neighborhood of a low $700 an ounce. So with these gold prices, you are going to be banking well in excess of $1,100, $1,200 an ounce for every ounce that you produce. You multiply that by 157,000, and again, all of those ounces we expect to be recovered, factored into the recovery factors. Yeah, you get our market cap, but that's an irrelevant data point. Like, number one, San Albino is open from an open pit perspective. San Albino is open down dip from an underground perspective, and then probably a hell of a lot more importantly, we have other deposits on our ground over at Las Conchitas and the rest of the land package, and having a functional plant that's capable of processing any of those ounces instantaneously takes any of those instant 2 ounces, and then all of a sudden it has to be revalued at over $1,000 an ounce, because that is the honest accountability for how profitable these ounces actually are. You're on mute.
Sorry. Can you speculate on life of mine at this point, Akiba?
Yeah, so the overall tonnage over here, you're looking at about 550,000 tons or so. We are building our initial scale, and again, this is in the open pit classifications over here at 500 tons a day. Just on the open pit itself, that winds up being about 3 years. I think it's fair to say that within those 2 small pockets of open pit potential over at San Albino, that pit is going to be where it is. Now, when I say I have more exploration upside over at San Albino, there are other deposits that showed up in that PEA that we just didn't focus on at all that need to be reviewed. So we do expect there to be additional open pit ounces that we need to go and do the work on to bring those in. And then finally, this is an orogenic system. In terms of underground potential over here, these veins do have a tendency of dipping for miles and miles and miles. You demonstrate the economic viability of these ounces going underground, you take whatever you have in the open pit and multiply that number by 5, just because of the dip continuity associated with these types of structures. There's a lot of work for us to do from an underground perspective, but we were very careful. We took out all speculative ounces, even in the underground. That's why you see over here in the underground, the vast majority of the ounce reduction that came was from the inferred ounces, because there was just so much speculative stuff that went into the underground before. But over in the underground, we had 30,000 ounces of inferred, and that was it. And the only reason why we had 30,000 ounces of inferred is that those tended to be ounces that were on either side of a fault area. So it was actually kind of difficult to place them from a location perspective. And we always took the view that if there was any level of uncertainty, boot it out of measured and indicated, put it in inferred, make sure that every single ounce in this model is real and will report to a mine plan. So even what we have on the underground itself is another 100,000 ounces, but that is wide open. So I have no doubt in my mind that with further drilling, that underground, let's say you're looking at something 2 or 3 years in addition to that from a mine life, you prove that it's economic for those 2 and 3 years, that underground is going to be mined for many, many years, again, just on San Albino. But the person who asked that question, again, I can't stress this enough. The reason why we built the plant over at San Albino was not just for San Albino. San Albino is extremely important because it's a proof of concept. How we're mining this layer cake style is unique. It's innovative. It took years of effort to kind of perfect how we're doing this, to mine at tighter tolerances than a ½ meter. But this is a proof of concept for where we are on the rest of the land package. So in addition to San Albino, we have a deposit over at Las Conchitas. If we wanted to put an inferred resource on that today, we could. We're not going to, because we're doing the same things that we did in how we delineated this measured and indicated resource over at San Albino. It took 19 months, where we had to do our own internal geological model. We hand off that geological model to literally the most conservative resource estimator that we have in our industry, and make sure that when we put out a resource with specific numbers, they are met or exceeded, full stop. So when you're asking questions about the mine life over at San Albino, yes, that's great for a trivia game. It literally has nothing to do with the valuation of this company.
Okay, so I do want to stay on talking about the land potential, but there's one question that remains unanswered for a while. So I'm going to skip back and just hit you up with, what is the Capex to expand the plant to 1,000 tons per day?
So the crusher that you see in the back right, you kind of have to squint your eyes. It easily can handle 1,500 tons a day. So don't have to do anything over there. Again, with squinting your eyes, you can see 5 tanks in a row. Based on our expectations for residence time, that will be sufficient to run this at 500 tons a day. We took the approach of pouring foundations for 10 of them. So assuming that we're correct on that 5 tanks for 500 tons a day, we'll have the ability to add another 5 tanks over there. That really is low Capex. That's hundreds of thousands of dollars to do the steel and welding work to build those tanks. We have a filter press, which is not in this picture. We're actually getting it delivered this week. The first load did arrive. With minor modifications, that's capable of handling 1,000 tons a day, a small Capex. The refinery, which is not built in this picture, but it's effectively complete. We're just putting the roof on today. With minor modifications, that'll be able to handle 1,000 tons a day. So from the plant perspective, low single-digit million. What you see in the center of your screen is a more impactful from a PP&E perspective type Capex. So from soup to nuts, that tailings storage facility cost us about $5.5 million to build. If we want to, and to put this in perspective, that's probably enough at 500 tons a day to be 3 years, maybe slightly more than that. So obviously, if you're going to be running at 1,000 tons a day, you cut the mine life of the tailings capacity in half. So that'll be like 1.5 years. Not all of that $5.5 million needs to be spent again, but at least 3.5 of that to do what we're doing over here to make this top of the line from a safety and security perspective. So low single-digit millions from a plant, maybe another 3.5 millions from tailings, added power. Certainly less than $10 million to expand from a PP&E perspective. The big thing is, just like the exercise we went over at San Albino, is that there was a total census of drilling meterage of just under 80,000 meters to delineate what was effectively 240 meters of strike. So in order for us to do the same thing over at Las Conchitas, and its entire history going back since 2011, there's now been about 20,000 meters put in over at Las Conchitas. Again, this is an area 3 to 5 times as big over as San Albino. At a minimum, to get that started into a mineable resource, you're going to need 75,000 meters of drilling to get Las Conchitas into a mineable form. Based on our current drilling costs, which are effectively all in at $135 a meter, that will add a low double-digit million number to that Capex. That's not PP&E. That would be expense, because this is outside the mine. That would equate to, we do believe that in order for this to be expanded in any reasonable fashion to 1,000 tons a day, based on the ounces that we currently have in our ground, will take somewhere between $20 and $25 million to do, which is going to be less than a half year's worth of cash flow that we're going to be generating from the 9.5 grams from the deposit itself.
Since you're talking about Las Conchitas, let's focus on the drilling there for a minute. Can you point out geographically or highlight some of the drill targets? I know that Bayakan has been one of the more exciting regions. Maybe you can focus on where you'd like to do some more drilling.
Sure. So Las Conchitas abuts San Albino, certainly different veins, right? So the strike of the vein is going to the northeast. So when you're due south, like we are over at Las Conchitas, they're definitely different veins than the 3 principal veins that made up San Albino, Naranjo, and Aras. But it's effectively the same, very, very similar geochemical characteristics like you have over at San Albino. Host rock is similar. We do think this is part of the same overall geological event. There are 8 specific targets that we have over at Las Conchitas. We are focused on the most advanced, which is Bayakun. We have a single rig operating over at Las Conchitas right now. We've just commissioned a second rig to start over at site, just because we can kind of see the whites of the eyes of production. So we're slowly going to be ramping up exploration spend over the course of the next couple of months, and then rapidly expand that by Q2 of next year. And then right now we're focused on Bayakun, which is towards the southern part over at Las Conchitas. So still within that blue box, but towards the southern bit over there. And we're going to have drill results out on that certainly by Monday, and really as early as tomorrow.
And can you talk a little bit about the new concessions that you acquired last year? First, are there any royalties? And second, what are your intentions with those? Where are you focused?
Yeah, so we acquired Puerto Rios from another public company called Condor Gold. Actually, at one point prior to 2009, Condor owned everything over here. That's another story. So we acquired that concession for $600,000. And as you can see in our last press release on this particular screen, we've now done prospecting work over at Puerto Rios, August 10th, where we have the full 3.5 kilometers of strike within Puerto Rios on the other side of the river that has a multitude of samples that we took that were grading in excess of 10 gram material. And then you can see we further expanded that onto concessions that we already own in 2018 on the San Albino Murra concession directly to the northeast. So we do think that we're sitting on a 6.7 kilometer structural corridor on strike to San Albino, in addition to the 240 meters of open pit strike length that we delineated over at the San Albino open pit deposit. So we still kind of talking to the government about it. Unfortunately, the drilling permits that went with Puerto Rios, we have to renew on Mako's name, so we're still going through that. So there's a limited amount of work other than that basic prospecting that we did over at Puerto Rios. I'm hopeful that I'll be able to start drilling on that in the early part of next year. And then meanwhile, we're starting a geochem survey on concessions that we do have the ability to do things on the reds over here. But and that's actually kind of important when it comes to kind of like the previous strategy, is that it wasn't even just drilling and exploration that money wasn't being spent. Even geochem surveys, there was no budget for. To do that 30 square kilometers that you see over there, yes, it's going to take 4, 5, 6 months to get a couple of guys with an auger drill to go and do an appropriate survey over here. But the vast majority of that cost is actually not labor. The vast majority of the cost is on assays. But the entirety of the 30 square kilometers is going to cost us $400,000 to do. And then the thing about our veins is that they're shallow dipping, but very, very little direct outcrop on our land package. So really the key exploration tool is geochem. The only places that we've had geochem surveys done on our property have been on San Albino and Las Conchitas. And lo and behold, we have a deposit over at San Albino that we've already started to mine. We're gonna actually start processing from it in January. And there's no question in our minds, we have another deposit over at Las Conchitas. And the principal exploration tool that we have to find any of this is geochem. And for the first time in 12 years, we finally have somebody willing to sign off on a $400,000 expense item to do the principal exploration work on our asset. But to cover 30 square kilometers takes time. It's going to take 4, 5, 6 months to do. Luckily, we're now almost out of rainy season, and we'll have the ability to do this pretty much uninterrupted at least on the red part of the concession, and then we'll go back to Puerto Rios early next year when we actually have full Mako level permits from the Nicaraguan government.
Are you willing to wager a guess on how many ounces that you'll have on the entire property?
I've already made 8.5 million wagers on that.
All right. Going back to some more like sort of company strategy. So I had some questions about due to COVID, did you extend the LOI timeline on GR Silver evaluation of the Mexican asset land package, or will there be a decision by them in December?
No, we're talking to Marcio, so it's still ongoing. This is our Mexican properties, so we had a hurricane hit our property literally 2 days before the shareholder vote to agree to the merger between Marlin and Golden Rain. It was a direct hit from a Category 3. We tried to open up that mine in January of the following year in 2019, and then the geotechs over at the pit where it was just no longer safe to operate. So we could very well have. We were actually kind of fortunate that no equipment or personnel was hurt. So we shut down the mine at the end of January of 2019, and then started the path towards reclamation, which we're essentially complete with. So we filled in the ponds from the heap leach, and then now I would say within a week, now that we can kind of kiss the last rainy season goodbye. Actually, it wasn't even that bad of a rainy season, but now it's a prudent time to build a fence around the pit. So 3 weeks, maybe another $25,000 worth of expense, and then we'll be able to submit our final reclamation, which is actually a conditions precedent for selling this to GR Silver. They're working their way through the diligence items. I think it's probably fair to say that that COVID required them to use all of the full 12-month window that we gave them, but we're on pretty reasonable terms with Marcio. So it looks like hopefully we'll be able to get to a resolution on this over the course of the next couple months.
Okay. What are some of the safety issues in the day-to-day operations, and how involved are you personally with safety, and how are these issues addressed?
Yeah, so obviously Mexico, it's its own thing where the personal security situation kind of got out of control in the country. Nicaragua's been fine from a personal security perspective. I think we've gone through a series of iterations, and it's not unusual to see this with respect to actual employee safety, just from an operations perspective. Is that this was an exploration company over at Golden Rain, and we actually like the entrepreneurial approach, like really gung-ho. We didn't need to come and with a much tighter grip on even running this from a safety perspective. I am involved in everything when it comes to that. We really do not cut corners when it comes to safety and operations. It is something that we're constantly improving, but we came from a place which frankly should have been improved on. Luckily, we haven't had any serious injuries on site, but it's always an area that we just need to improve upon. Usually when people ask that question with respect to Nicaragua, is that there's always kind of this, I'm not sure if it's like images from the 1980s and the Civil War, or even from the political violence in Managua that happened in 2018. But as a country, from a personal security perspective, it's fine. You can walk around anywhere at night. You don't have to feel concerned. The local population are wonderful people, hard workers. They're going about their lives. For whatever reason, which I don't really have a full grip on, is that drug trafficking doesn't really seem to have been a major thing in Nicaragua, even though its neighbors to the north have had a lot of issues. So with that part over in Nicaragua, it's been great. It's like night and day to working here versus Mexico. And then with respect to employee safety, it really is a constant and concerted effort to make sure that every single day is better than the last, to make sure that everybody comes home safe and secure on any given day.
I think the question was more focused on the operational stuff. I got a follow-up comment here. The insight on personal security is interesting, but I think he wanted a bit more of a focus on the mining operations, if you don't mind, Akiba.
I do think that that when we had an operating team come in here, I think it was, and to the Golden Rain side of the business, to their credit, I think they've actually accepted us and embraced us. But I think it is fair to say that we had a very different way of doing business than they did, and I think really for the first time in a long time, I can say we've now bought into the full Mako strategy, and that includes making sure that we have zero tolerance for any sloppy safety work.
Got it. And while talking about Nicaragua, do you think that you do get a Nicaragua discount on the stock?
Sure, which that's fine, right? So like that I never have an issue with, is that here's, like, if I'm putting on my investor hat and I say, all right, I bought into Mako. I believe in the 3-stage category of build a 500 ton per day mine as a proof of concept. I believe in Las Conchitas as a deposit, and I think that you have an orogenic gold mining camp, and I'm going to discount all 3 of those relative to my estimation of risk. And then on top of that, I'm going to put a discount on you because you're in Nicaragua versus the United States. That's entirely rational. Like you can't argue with that. It's a Nicaraguan government is extremely friendly when it comes to mining, but it's a small developing economy, and things can change on a dime. In 2018, there was unrest, and it was uncertain. There's going to be elections in 2021. There's always a lot of risk when you're dealing with countries of this size. Being a single asset producer in that regard as well adds elements of volatility and risk for an investment like that. So absolutely, we should get a discount for all those reasons. The size of the company even should also account for that. You could say my spirited defense of the company before had nothing to do with us being in Nicaragua. It's just that people, when you put down numbers on a page, the frame and the myopia that comes, I call it mine myopia, is that as soon as you build a mine, the only thing that people can focus on is the mine. But we're not looking at this as a mine. We're looking at this as a mine as a proof of concept to unlock everything else from an exploration perspective. And then we do kind of ask our shareholders to at least listen to us in terms of what our real strategy is. But if you are investing in Mako for reasons that are different than what I'm trying to communicate, maybe you should reevaluate why you're investing in Mako in the first place.
Here's an easy one for you. When do you think that you'll have a second rig drilling at Las Conchitas?
Yeah, so we actually have a second rig turning probably about 4 days ago. There's I won't go into too many details, but we actually there may be an exploration target that really has not been looked at over at San Albino. So like obviously nobody should have any expectations about that. It really is like early stage exploration. So we're actually focusing on that rig in that area because obviously it's part of the permit. If we find something there, then great. So that rig is going to be running continuously throughout. So as soon as we're finished doing some prospecting work, either we announce we made a discovery and that rig is staying there, or basically, all right, good, nice 10 holes that we spent there. Let's move back to Las Conchitas so we can start delineating. But one of those 2 things will happen with that second rig. I think when I have full clarity on when we're going to go cash flow positive, because we're not going to be starting the operation with the high grade material. It's not. You have to test this mill with well, first of all, those leach tanks over there need to be properly bedded with quite a few inches of material that will never come out until you're there scraping the bones of that during reclamation. If you put high grade material through that plant today, you're not getting that gold back for 10 years. So to properly bed those mills, there needs to be about 5 or 6 weeks of extremely low grade material going through that plant. So when you see me with a nice picture holding up a shiny or maybe even not so shiny bar of gold in Nicaragua, that's not going to be coming from the good stuff. That's going to be coming from shit material. The next objective in after the tanks are properly bedded is that we're going to be putting historical dump material, which we're estimating, conservatively estimating, grading at approximately, you can see on the bottom, 2.95 grams a ton. So that'll be the second bit. We're going to probably be running that through end of March. And it's really not going to be until early Q2 that we're going to be putting the high grade through the mill itself.
Okay, great. Thank you. Akiba, can you talk about the upcoming reverse split? Since the announcement, the stock has sold off do you think that the market doesn't like this? Does it change your strategy? Like maybe just give us your thoughts about the uplisting.
Sure. So our last AGM, we announced the proposal to do a 1-for-20 reverse split. I've told people that we're only doing that in conjunction with an uplisting to the TSX. I mentioned this earlier, is that even if we are able to execute on all of our objectives, it's like the company itself is still too small to be the ideal size and scope for a public company. So we do need to find ways, big and small, to enhance our liquidity, enhance our asset portfolio, potentially even through M&A in that regard, to get us to enough heft where we're going to be a globally relevant mining company in the context of what we do believe is a new bull market. So part of that is to try to do things that will enhance the liquidity of our stock. So there's a few things technical, and then there's a few things kind of observational, optical even. So on the technical side, when you're the TSX and when you actually have a high notional share price, you're actually able to do things with your shares. You'll be able to, investors can short them, they can margin them, they can trade derivatives against them. All of this winds up creating an ecosystem, if you will, of enhancing liquidity of the stock. And if that's the case, you're moving the needle to when eventually you can be inserted into one of the indices, which are very quantitative in terms of the selection parameters. So we're nowhere near being able to qualify for some of those indices. We're trying to do things that will move the needle over there. Now, the other thing is optically. There's a reason why we selected MDA to do this resource estimate, is that we wanted to make sure that when we're using an outside consulting group, they are the best, they are the most conservative, because it is putting an image of the company in terms of what we are trying to convey and the level of seriousness that we're trying to take our 3-stage approach over in Nicaragua. So yes, we have a conservative estimate, but it was intentional to design that just to put a conservative stamp of approval. Same thing goes on with our stock price. I don't like the fact that we have a penny stock traded on the venture exchange. I don't like the fact that we had shall we say, kind of a shareholder base that was investing in this company for reasons that real investors, and I'm not even talking about institutional, because retail are equivalently important, but real investors who are making real investment decisions based on whether or not the management team can execute on the vision that they're trying to do. Just like I tell people that if you are in Mako just because of the San Albino mine, sell me your shares. If you are in Mako because you want to be invested in a speculative company with all the connotations that it comes from, by having a low stock price, by being a penny stock job, if you will, sell me your stock. I will take it. We want to convey an image that this is a serious company, and there's a lot of work that we need to do. Right? Like we're kind of moving this. I don't expect this to be turning on a switch and then all of a sudden we're going to be a mid-tier mining company. No, it's like we are doing a lot of things from starting from a very entrepreneurial place by doing the merger, acquiring Golden Rain, doing all the hard work to get us to the point that we're about to be into cash flow. And then we also have to do the things from the public market perspective to eventually move us to the direction of being a serious mining company. And there's a lot of work that needs to be done for us to get there, but it is the guiding light for where this company is going to be going.
All right. Well, that wraps up all the questions we had from the audience. Akiba, maybe you could just list the upcoming catalysts for investors to keep an eye out for. What can they expect from the company in the coming months?
Yeah, so in the coming week, we're going to have some Baiku expiration results. We'll probably have at least, inclusive of that, at least 2, maybe 3 updates by the end of the year, but at the very least 2. then the next big thing is this, right? So we'll be functionally complete with our plant in December. We'll turn it on. Obviously, we're putting close to dead material through that plant for a period of a few weeks. So we're anticipating first gold pour in the first half of January. So that'll be a big milestone, and then commercial production in early Q2. And then even though we're incrementally moving in that direction, there's going to be a pretty big step function. The second that I can smell that we are cash flow positive, instantaneous like that, we are taking off the gloves when it comes to exploration spend to get us to where we need to be, which is to take the bones of that resource that we've now delineated with literally the most credible people out there over at MDA, using the work that we gave to them from our 2019 infill program in February of this year, using that as the bones to start finding more of this stuff, because the way that we're mining is innovative, but the way that we're mining makes this particular operation so off the charts in terms of other open pit mining opportunities around the world, that in terms of the demonstration of success, the cash flow that's going to be coming from it to find more, we'll now have the ability to have our full operations serve as that nexus to go and make everything else on our property more valuable, such that we can execute on our three main objectives. Building that mine you see over there, number one, getting Las Conchitas up and running by late 22, number two, and then finally proving that this really is an orogenic gold mining camp.
I don't think you could be more clear than that, Akiba. So thank you very much for taking the time to explain the resource update and the company's objectives. I don't see any other questions. I think that's a great note to leave it on. Any last comments?
I think that's good for me. So anyway, I appreciate everybody. Like obviously, I appreciate everybody being a shareholder to Mako. This was a big week for us. This was the first time that everything about this company is now the shark. We were still kind of operating on at least a little bit of the old Golden Rain side. As of this week, we are 100% shark.
Okay, great. Well, thank you very much, Akiba. Thank you everyone for participating. If you have any additional questions, feel free to reach out to myself or Akiba, and we'd be happy to have a longer chat with you. So everyone have a good afternoon.